Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. This is all enabled by me using margin against my growing assets to pay all my bills instead of using my paycheck to pay bills first, then investing the rest as I used to do. As you know, margin isn't free. I'm paying $698 a month to carry my big 187K margin balance, but I'm making 5.5K a month in passive income with that leverage. It makes for a positive spread of about 4.8K every month, which is amazing. For my purposes and situation, it's a great deal. If I stopped investing tomorrow and let my portfolio be, it could sustain itself and be more than covering the margin interest every month and paying down the margin balance. But yeah, as you know, instead, I keep investing and keep compounding every week. This week 57 portfolio update is a good example of how I show transparently how things are going, whether things are red or green. And it is very red for me this week. I'll go into all the details of my underperformance this week, breaking down how I underperformed the S&P 500 by almost 3x with my 5.37% total return loss. I'll also check in with my margin health, all my dividends received, talk through some big portfolio updates where I consolidated QQQI to TDAQ and also sold SPY for Goop, and then finish off with the finance channel of the week. If you appreciate all that transparency, give a like and subscribe. And as usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. So make sure you have a good read of this whole disclaimer. As far as my weekly flow chart, I won't go into the details of this, but if you want a deep dive of this, check out the video at the top right. And let's just get started. So if we pop over to Robinhood, we can see my full live portfolio here. You can see all my positions, nothing's hidden here. And yeah, you can kind of see how I had a rough day on Friday. It was down 5K or 2.18%. Ended the week on 225.8K. If we check on the week, I was down 12.8K total, a lot, or 5.37% as I mentioned. And then really if we compare that to VU, right? Just down quite a bit. So VU was down 1.95% and then I was down 5.37%. So really, again, this is where the risk of margin, right? Like it amplifies both to the downside and the upside. It's been great when it's been going up in the last several weeks, right? But on red weeks, you could potentially go down a lot. You will go down a lot harder, not even potentially, right? So yeah, this is an example where I was down almost 3 times the S&P 500 this week, right? Definitely, again, margin has risk, right? Got to be careful with it. Then on the month, I'm sitting at 3.5K or 1.55% lost. On the 3 months, very positive still, up 70.3K or 45.24%. So just kind of amazing run up over the last several weeks, like I've mentioned, right? Yeah, so we were kind of due for a little dip, little correction, right? So I think that's just healthy in the market. And in the grand scheme of things, this dip is like nothing, right? Like considering the run up that we've had. So you can kind of see here, year to date, I'm still up 22.67% or 41.7K. And again, this is total return as well too, right? So this includes all my dividends, even margin interest deducted and stuff like that on the 1 year. Let's just go all since it's pretty close to July, up 48.8K or 27.6%. So nice and green overall since I brought everything over to Robinhood in July last year. If we pop over to my spreadsheet to kind of really deep dive on things. So if we check here, we can see that if we add up all my positions and checked on the gross value, I'm sitting at 412.7K. So definitely a little dip compared to last week, right? This will fluctuate week to week based on the market. But the key thing here is that this will just keep growing, right? Any asset I keep buying, this will kind of grow that number and keep compounding. I'm never selling anything to kind of take money out of the portfolio. What I'm doing is using margin. So essentially a loan against all those assets. So my margin is sitting at 107.3K. And then that gives me a net value of 225.3K. So that's where the numbers are at. As far as the total returns and unrealized gains, we can kind of see the 2 columns here. So total returns and then unrealized gains. So this is typically what you'd see on your brokerage side, right? And then this is what I calculate myself because I think, yeah, the total return is super important to keep in mind, especially for the high yield funds. So you kind of see that a lot of things have been flipping red this week, right? So some stuff that have just kind of continued going to red. So OR just got worse. IALT climbed up a little bit, and I bought a little bit of that dip, as we mentioned in the weekly paycheck investing video. YMAX dipped back in the red here. ULTY just kind of sank deeper into the red. Goop, we'll get into this later, but this is what I switched by to, but this got in the red just with tech being hit this week. And then, yeah, KGLD and KCOP, so gold and copper got hit hard with just kind of like potentially the yield hikes coming down later this year, and then also just the war in Iran popping off again. So this got hit hard. GIAX just holding on to its green, but it's flipped red on the unrealized side here, as we can see. And blocks just kind of got back into the red here, and even until return, but also bought the dip on this week. And then BTCI just kind of continuing its leg down, right? With BTC kind of just going deeper and deeper into crypto winter. So that's where stuff is sitting. But if we check in on the total profit for all that, so that includes my realized gains and losses. So right now that's sitting at 11.6K, right? All my dividends received and all that against my margin value, that's still a 106.2K gain, or a 47.14% gain on the total return, which is amazing. So very green there. And then even on the unrealized side, still sitting positive. It's getting closer to that 0%, but sitting at a 15.9K gain, or 7.09%. So still green overall, but yeah, definitely inching back towards there. So we'll see how that holds up. But it's been nice to hang out in this green zone for a bit. If we check in on how stuff is split between the growth and high yield income, so we're sitting at 200.3K in the growth side of things, so 48%, and on the high yield income side, we're sitting at 212.3K, or 51%. So that's basically everything in white here is growth, and then everything in gray here is high yield, right? So that's what makes up the 412.7K. If we check in on my margin health, so my equity is sitting at 54.61% despite that dip, right? So it's really helping that I'm like investing every week and still kind of keeping this relatively stable, right? It'll dip a little bit with those dips, but I'm still buying those dips even as we have these red weeks, right? If anything, like I'm kind of more excited to buy those dips on red weeks, right? That's what's kind of nice of having my weekly paycheck and just kind of be consistently investing no matter what, 100% of my paycheck, right? If we check on the values here, so like gross, margin, and net value, that's all the same for what we mentioned before. But if we take our gross portfolio value, then multiply it by the blended margin maintenance ratio, all my positions are 25%, which is great. Love Robinhood for that. My margin maintenance dollar value is sitting at 103.1K. So this is the value my portfolio would have to fall to basically trigger a margin call in where they would start liquidating positions, right? So if you take that and minus that out to the net portfolio value, you have a 122.2K buffer, right? And that's a key thing here, right? So if that amount gets hit, you're basically in a margin call. So if we go off the net portfolio value, that's a 54.22% drop, right? So this is what Robinhood will show you, right, on their margin buffer calculation. But personally, I'm not a fan of this, as I kind of mention every week, just because that makes you feel safer than you are, right? Like this is like, 50% drop. That's not going to happen. But really what I think is important to look out for is like what your gross portfolio value would need to drop for a margin call to be triggered, right? Because this 122.2K against the full portfolio value is actually a lot smaller of a number, right? So that's 29.61% right now. So we're back under 30% with the dips that we've had, right? And this roughly amounts to kind of like the leverage multiple that you have, right? So right now I'm kind of like 183% leveraged, or basically 83% of my portfolio is margined, right? So if we did 54.22 divided by 29.61, we should roughly pretty much get that, right? So, or even if you times that to get that. So it's really important to kind of keep in mind amplification, and that's what kind of gets dangerous with margin, whether you're investing a lot more or you take a lot of cash out, right? Like that amplification and leverage multiple is very real, right? So that's the thing that I feel like this number lacks that context, right? You just kind of see that and you're just like, oh, that's fine. That won't happen, right? So I'm always kind of keeping this in mind. This is why this is like highlighter green, right? And I'm checking in on this every week. People ask me like if I'm worried about stuff, and really this is why I check in on the margin health, and I'm making sure this is healthy. And if ever it gets to like a critical level, that's when I know I might need to bring in cash or liquidate certain positions or whatnot. But we're not quite there yet. This is still, despite everything, still relatively healthy. But ideally, I want to get this to like 40, 50%, like I say, right? As far as my margin buying power, I'm sitting at 87K essentially. You get that by doing your margin total minus your margin used. And this is like the full amount. If I wanted to, I could kind of take this and invest this back in the portfolio. But like I said, I want to keep this margin buffer high, right? And if you take half that amount, that's basically cash available for withdrawal. So I have 43.5K of cash available for withdrawal. And yeah, so that's cash I could take out of the portfolio, right? Like if I simulated this, for example, and just kind of took that out, right? And margined that, so we can kind of do the example. and then took that out of the margin total as well. So it was like 43.5K, right? Or 39. So if I took out all the cash in my portfolio, this is what it would look like, right? And equity would drop to 44%. My margin buffer would drop to 19%. And yeah, so you can kind of see how that would affect things, right? And it's kind of nice to be able to simulate this with my portfolio setup here. And again, if you're ever interested in getting this portfolio tracker, you can find us on Gumroad for a one-time fee of $5. Love using this, obviously. And that's the margin health. So overall, despite the dip this week, pretty healthy overall, right? And this is just going to keep improving as we keep investing. And then as far as my monthly dividends, so I'm sitting at roughly $5,558 a month in dividends, or that's 66.7K a year. So in some places, this could be like a salary you could live on, right? Unfortunately, I'm in a high cost of living area in the Seattle area, so this is not quite enough for me to live on, but it's getting there. This is like actually the equivalent of a third paycheck for me, which is amazing, honestly. More than a 2-week paycheck, essentially. Weekly, that's 1.2K, and daily, that's $182 coming in. So really, that amounts to a 31.42% distribution yield. And that's if you calculate it against only what's invested into the high yield income assets, right? So the 212.3K. But if I calculate that against my full portfolio value, so including the growth, that's roughly a 16.78% yield. So yeah, just pretty solid yield overall for everything, the blended yield. And as I mentioned at the top of the video, this margin isn't free, right? This is a big margin balance. I'm paying $698 a month to carry this, but I'm making 5.5K, right? So that's a 4.8K positive margin spread, or 26.92% yield, essentially. So pretty good spread, if you ask me, given the leverage I'm taking out. And it's kind of nice to think that, like, say worst comes to worst and I stopped investing, like my portfolio could sustain itself and kind of be paying off that margin interest every month, and then even paying down the balance, right? So 4.8K would come off the balance every month. So pretty good to have that as a backup just in case whatever happens, right? And yeah, that's the numbers there. If we check in on Snowball to check on how the different categories are holding up. And again, my Snowball portfolio link is in the description below if you're interested. Completely free to check this out. And then also have a referral link if you're interested. You get a bit of a discount and I get a little bit of a kickback there. But yeah, obviously, with how much I use Snowball every week, I love using this. And again, I love using a combo of this and my spreadsheet, just because I like some of the manual stuff that I get there and some of the extra info that I can kind of pull myself. But it is nice to have this automated part too. And yeah, as far as all the categories, everything's still sitting in the green in total returns, despite the dips, right? So the ultra yielders here are still sitting in the green, positive 14.4K or 12.56%. Again, mostly buoyed by Chippy, GIX a little bit in the green there, but the rest is kind of in the red. The anchors here, so this is what I've been really focusing on investing this year, especially like the anchors and some in the hedge here. So that's up 11.8K or 11.57%. So most things are in the green here except for, yeah, KCOP and Goop, which is fresh, as I mentioned. And yeah, the big winner here really is XPAY. This has been doing amazing. I've been really happy with XPAY overall. Like I generally try to time it in like some of these like lower dip channels, right? And yeah, that's kind of giving me good both capital gains and dividends, right? So that's a nice one. And then on my hedges here, so this is a combo of kind of long short equity ETFs such as OR, IALT, CLSE. So IALT and OR are more on the international side, and then CLSE is more on the US side, and CLSE is kind of carrying things right now. But yeah, these are all in the red. KGLD got hit hard, as I mentioned. IALT just barely in the red here, and I'm still buying a little bit of that dip here. And then OR, I've kind of stopped investing in for now just because like I haven't been as impressed with it since I started investing into it, and it like really hasn't been holding up well with like the rally that the rest of the world and stocks have been having, as kind of the war stuff has been easing on and off. And yeah, it's just been kind of down. So you kind of see here that I've kind of sold some shares here, and I've been kind of reinvesting those into IALT to have a little bit better diversification as far as like international exposure. Like I think OR is just a little bit too exposed in Japan in hindsight. So I knew that going in, but kind of seeing it in practice now with the Iran conflict that has been definitely kind of sobering, right? In that sense. I'll still hold on to it, hoping that it kind of recovers a little bit, and I'll just kind of keep trimming to kind of potentially add to IALT. I don't know if I'll fully get out of here, but we'll still thinking that through. And then we have my growth and dividend growth anchor ETFs, right? That's up massively, 39.2K or 31.49%. So everything here is in the green in double digits, right? VOO, VGT, SPMO, SCHD, QQQM, and DRAM. This is probably the most volatile out of the bunch. Very concentrated small sector of chips, right? and memory. So just holding on to this maybe for the next couple of years, and then probably we'll sell and then reinvest into something like VGT or QQQM or something. But yeah, just a little play there to benefit a little bit extra from the memory bottleneck we're going to see for the next little while. And that's where the categories are sitting right now. If we check in on how we're doing against the S&P 500, again, these numbers are a little bit different than what we might see in Robinhood, right? I haven't quite figured out why exactly, but like in general, just kind of good to see like side by side, since Robinhood doesn't have the compare feature anymore. They used to have it and they took it out for whatever reason, but you kind of see how really the margin amplification was really at play here on the down days, right? Like I got up higher on the green day, but then on the down days got hit harder. And because of the successive down days, I wasn't quite able to kind of recover back out of there, right? So just underperformed the S&P by a little bit there. So like 3.15% or 7.1K according to Snowball. But overall, if we check on the 1 month, just inching out on the 1 month there. On the 3 months, still beating it out nicely. On the 6 months, beating it nicely still too. Up 20.26% while it's up 0.47%. Year to date, I'm up 23.02% or 42.1K, and against it's 7.82%. And on the year, still up quite a bit, right? So yeah, just kind of interesting to see like the ebbs and flows, right, of how it goes. So yeah, was underperforming for a good chunk here, and as stuff was going down, but as stuff has rallied, has gone up majorly, right? As far as the heat map, we can kind of check here on the week. So yeah, again, very red week, right? And I'm not going to shy away from it. If we have successive red weeks, I'll be here showing it, right? You'll see it. Not trying to hide anything. I just want to be as transparent as I can be, right? As I kind of navigate this journey. But it is nice to see that MLPI and SCHD held up, right? Because there was a lot of sell-off in tech, and then they kind of rotated into value plays. So SCHD is kind of that. So I'm glad to be holding a good chunk of SCHD. I think like that kind of helps stabilize things given how tech heavy I am in the portfolio, right? A good chunk of my portfolio is in tech, right? And MLPI. So with the war kind of re-breaking out after the bogus memorandum of peace, oil shot up again. So MLPI shot up accordingly. So that's been nice to have a little bit of exposure there. But yeah, as far as kind of seeing some links here between everything, can see that Chippy and Chip stock sold off quite a bit. So down 6.3%. PMO down quite a bit as well. Less than QQQM, surprisingly. Actually down less than VU, which is interesting to see. Blocks down a lot more than Bitcoin here in BTCI, which is interesting. That's probably because of its like exposure to like NVIDIA and whatnot. So it's like has a little bit of chips and crypto exposure here that hit it as a double whammy. KCOP and gold down quite a bit as well too, right? DRM quite a bit here too as well at 6.3%. And ULTY down a lot more in YMAX as well against VU, which is interesting. But TDAQ actually held up better than QQQM, which is cool to see. And then TSPY held up better than VU as well too. So whatever Tap Alpha is doing, I forget. I know they're doing some stuff to hedge a little bit, but yeah, holding up nicely against thing where they drop less than the reference index, which is cool to see. Actually, really cool to see. That's how stuff is looking. If we check on the month, yeah, still mostly red, but Chippy still positive despite those dips, right? Because it was up a lot. SPMO still in the green here. MLPI, 3 months, very green, right? Like we said. Yeah, just 64% massive jump for Chippy, which is just crazy to see. SPMO 40% as well. The rally has been definitely crazy to see, right? But year to date, if we check, things are mostly in the green or still lagging behind, like I mentioned. BTCI and blocks lagging behind. Copper and gold lagging behind. Google fresh position, but lagging behind here. And then ILT just slightly, but everything else just very green, right? I love using this, honestly, to kind of find the dips on stuff and kind of figure out what I'll be investing in next week when my paycheck comes, right? So I use a combo of this and kind of like the find a dip tool, which works great. So I kind of check the different dates, right? 10 days against the 50 day to like 100 day to 200 day, depending. So this really helps figure out what I'll hit every week. As far as my dividends this week, and actually, I actually forgot to set these up. So I actually can mark these as received. So actually that would change the numbers that we have seen earlier, but yeah, these are relatively small, so not too worried about them. Can just kind of save them. But yeah, this week was a pretty good week for dividends. I basically got just a little over $1,000, right? Got blocks here at $37 or 37%. Had GIAX at $19 or 24%. Had $500 for Chippy at 49%. $198 from ULTY at 68%. and $118 from YMAX at 50%. And just as a reminder, so for all these dividends, right? So what I've been doing for these is that I'm not fully reinvesting that full amount this month. What I'm trying to do instead is to do 50% to see if that helps out with stabilizing the cash available for withdrawal and actually kind of keep that growing month to month. Then for anything like QQQM, SPMO, VGT, those get fully reinvested. So QQM, SPMO, and VGT, I just reinvested all that into growth and took advantage of the dips here to kind of invest those. And I mentioned that in the Discord, right? You can kind of see my buys here as I've been doing stuff, just reinvesting those 50% of Chippy, YMAX, and ULTY, early reinvestment of SPMO and QQQM when stuff was dipping this week, and growth dividend reinvestment here as well. So kind of early investing of SCHD and things like that as well too from next week. I just wanted to kind of capitalize on the dip here. And this is a nice little perk that if you join the Discord community, you get all my trade alerts ahead of the videos, right? So I give a lot of my thinking here, and then we'll actually get into the SPY and Goop and TDAQ and QQQI in a bit here. Yeah, great little community if you're interested in joining for just $3 a month. Lots of great back and forth with people. We're always kind of trading ideas on like new funds that we're researching, talking about taxes, how people are living off their brokerage, right? So a lot of good stuff you can kind of delve into with the community and learn from a bunch of others that are kind of doing similar things, sometimes a little bit different tweaks that are kind of interesting to learn about. So love our little community of in Discord, right? We're like about 440 members strong right now. So nice tight-knit community. As far as the dividends, if we dive in here a little bit more, we can kind of see here how year over year, as we've been kind of just investing every year, we can kind of see that my monthly dividends are growing, which is great. And we're definitely beating things out from June last year, which is awesome to see. We were at 4.5K last year, and to this year we're at 5.2K, and we'll be at a little bit higher after next week. I think we're going to handily beat July to August. Remains to be seen if we beat that out. We'll see. But I think so far we're actually trending towards it according to that. Yeah, we're getting close actually. It depends if the dividends hold up, but that's where stuff is sitting. Also as a reminder, right? Like this is a little bit different than what we saw in my spreadsheet just because Snowball calculates the last payment, then projects that out. But what I like doing for my estimates over here, right, is that I do the average, the monthly 3-month average for the monthly payers, and then also the 4-week average for the weekly payers. So this kind of generally comes in lower than what you might see in Snowball, right? Which I think gives a little bit of a better idea than the Snowball stuff because this fluctuates a lot depending on the payout that week, right? And as far as the yield on cost, we can kind of really see ULTY and YMAX just have eroded quite a bit, right? So people kind of keep asking me why I keep investing in these, and they kind of kick out quite a bit of income. You can kind of see that they're definitely up here, right? As far as like what brings in the income yearly. So yeah, happy to just kind of keep collecting these while knowing that they will erode, right? Both in yield and in NAV. But what I'm doing is, yeah, reinvesting 50% of those into safer yielders. So things like GIAX, XPAY, BCAT, KGLD, TDAQ, KCOP, Goop, TSPY, MLPI. Kind of really see that these are all holding up really nicely at their core, right? In the middle here. So like even with things going down, their yields are holding up, their NAV is holding up. So really focusing on these core anchors this year, right? I think I kind of over-indexed a little bit on ULTY and YMAX last year. So correcting that this year as a big learning, right? But still happy that I kind of kickstarted the portfolio with this and kind of having that base level of income, right? Like when I went through my layoff, I was kind of glad that I had these, given that I covered a good chunk of my income with my dividends and my unemployment combined, right? Mostly replaced my salary, which is awesome to see. But yeah, like I said, the next time I get in a layoff situation, though, I'm hoping to be in a situation where actually my portfolio covers my full net salary. So they're pushing hard on that. And that's why I'm investing 90% into high yield now instead of just 60% like I used to, right? But that's the numbers there. And as far as the portfolio thoughts, like I mentioned, so the big thing that happened this week is I finally pulled the trigger after thinking about it for a while of consolidating QQQI to TDAQ. Like I've kind of been saying for weeks now, like it's been hard to ignore that like TDAQ's NAV is just holding up a lot better, even with dividends factored out, right? On top of its higher yield that it gets against QQQI. So 17% versus 14% at QQQI. So I ended up selling 10.2K of that for a 6.9% gain or $659. So a little gain there. Or if you factor in all the dividends, that was actually more of like a 14.26% gain or $1,300 total return there. So I basically swapped that same amount to QQQI. And really like where that came up to is that like if we add it here in Testfolio, right? So I'm taking off total returns just to kind of really factor in just pure NAV, right? And we can check on total return after. But you can kind of just see that like TDAQ has just been recovering a lot better from dips. So it's definitely a lot more volatile, right? So you can kind of see here, its beta's higher, its volatility is higher. So that's kind of the cost you pay for that. But I think this graph kind of speaks for itself, right? It's just holding up a lot better while kicking out more yield. And then even if we factor in total return, like if I were to be reinvesting this, which I'm not, even then TDAQ still holding up nicely, right? So that this just got harder to ignore. And you kind of saw it week to week when I was kind of checking the heat map, right? You just see that like TDAQ was just kind of holding a lot better of those gains. So just happy to do that. I think the only downside is that TDAQ's a little bit more newer than QQQI. QQQI has a lot more history, but since it's come out, it's been impressive. So if ever that changes, I can definitely still reinitiate in QQQI in the future. But for now, I think I'm happy to consolidate and kind of reduce the choices that I have for if I want to invest into NASDAQ, right? As far on the high yield side. So very happy with TDAQ and Tap Alpha's management of it. So, and then the other big change that I did as well is I sold SPY for Goop. So kind of dipping my toes again in single stocks. I know I sold out of it during the layoff because I didn't want to hold through the volatility of that while I was laid off. But I don't know. I just kept thinking in my back of my mind, it's kind of fun to just be investing in Google while using the income that I got from Google, and YouTube related income felt appropriate for what I'm doing in the channel, and just kind of using that income to invest into more income and build more income. Just excited to get back to that. As far as why Goop over GOW or GUI, again, I think like this kind of speaks for itself. Like if we just add them here, and let's just take off total return just to kind of look at NAV, right? GUI and Goop. You kind of see here that Goop just holds up a lot better, right? And it even beats out GOW, which is leveraged. It just gets affected a lot more on those down days, right? So Goop still outperforms it, which is awesome to see. Even if we turn on total return here, that's where total return GOW forms, right? Because of its much higher yield. Goop is more sitting at like the 16% range. It ranges anywhere between 12 to 18% from what I've seen, because Curve kind of tends to adjust its payouts a lot better just to kind of help preserve NAV, which is I appreciate. But this is a little bit less relevant to me since I'm not actually reinvesting all of like the dividends from these, right? These are actually just depositing to the portfolio, especially since this is a monthly payer. But the NAV for Goop here is holding up much nicely. And then of course, if we add in like Google proper, right, we'll see that of course it doesn't hit the same performance as that. Like if I wanted raw performance without the income, I would do Google, but this is not the case. I actually still want to build up my income with that income. So you can kind of see, of course, given that it's a covered call ETF, that it's not going to hit the same gains, right? So you're having some trade-offs there to kind of make that income. So always important to keep in mind there. That's why I did Goop over anything else in the Google covered call income space. But that was the big two changes in the portfolio this week. Haven't had chances to think about anything else, but just finally pulled the trigger on these. I've been thinking about it for a while, for the last couple of weeks. So yeah, that was kind of a nice one to do. And as far as finance channel of the week, so wanted to highlight the Dividend domain. I just want to give a big congrats to Jay for passing 1,000 subscribers. So I think he's well on his way to monetization already. I'm not sure if he's hit the 4,000 hours, but probably going to hit it pretty soon here. But yeah, I've been following Jay's channel for a while here, and it's great to see someone else living out of their brokerage with margin and a hybrid setup of high yield ETFs and growth as well. Like, I'm personally always happy to see the space growing. He has a smaller account value, net value of like 25K and a gross value of 38K. So I think this is another great option for folks that are kind of into this whole investing style to kind of see how a smaller account value can kind of grow up over time to where I'm at now, right? Because I kind of started at like the 117K range and 200K gross value range. So this can be maybe a little bit more approachable for people, which I find cool. And you can he has a totally different salary, totally different paycheck setup, right? So I think there's lots of bits and pieces you can learn from every YouTuber to figure out your own personal strategy for what works for you, right? And for your own goals and situation. So yeah, definitely check out his channel. And he has a Discord as well, which I just joined this week. So excited to be active there as well too. He is on mine as well, which is awesome. So yeah, definitely check it out. I'll link it at the top right in the description below. But yeah, that said, if you appreciate all the transparency, definitely give a like and subscribe and hit the bell notification if you want to be notified about future videos. And all the links I talk about are all in my description for every video. So check those out. And I'll catch you in the next video. Peace.